The big secret about income tax. Brushaber v. Union Pacific Railroad. In the very first sentence of the opinion of the decision upholding the constitutionality of the income tax, the court says, as a stockholder of the Union Pacific Railroad Company, the appellant filed his bill to enjoin the corporation from complying with the income tax provisions of the Tariff Act of October 3, 1913. The income tax provisions of the Tariff Act. Now, the IRS says that Section 1 imposes the tax on individuals, and that Section 61 lists the sources subject to tax. So, what is actually in the law? Title 26, United States Code, Section 1, tax imposed. A, married individuals filing joint returns and surviving spouses. There is hereby imposed on the taxable income of every married individual, every surviving spouse, a tax determined in accordance with the following table. B, heads of households. There is hereby imposed on the taxable income of every head of a household a tax determined in accordance with the following table. C, unmarried individuals. There is hereby imposed on the taxable income of every individual a tax determined in accordance with the following table. D, married individuals filing separate returns. There is hereby imposed on the taxable income of every married individual a tax determined in accordance with the following table. E, estates and trusts. There is hereby imposed on the taxable income of every estate and every trust, taxable under this subsection, a tax determined in accordance with the following table. So we see that in each of the subsections of Section 1, every subsection of Section 1 imposes the tax in the very same way. There is hereby imposed on the taxable income. Note that neither persons nor property are the subject of this Section 1 tax, but that taxable income is. Note that while there is a tax imposed on individuals, they are not identified. Note that this statute does not state how the tax is to be collected or by whom. Note that this statute does not say how the tax is to be paid or by whom or when. Note that this statute does not say who is liable or to be made liable for the payment of the tax, leaving you to assume, 1, you are the individual, 2, you have taxable income, 3, you must file a return reporting such, 4, you are liable for the tax imposed, 5, you must pay the tax yourself. None of which is actually stated in the statute. Now, what form is required by Section 1? Part 602, Section 602.101, OMB control numbers. This implements the Paperwork Reduction Act. It states, A, purpose. This part collects and displays the control numbers assigned to collections of information in Internal Revenue Service regulations by the Office of Management and Budget under the Paperwork Reduction Act of 1980. The Internal Revenue Service intends that this part comply with the requirements of OMB regulations implementing the Paperwork Reduction Act for the display of control numbers assigned by OMB to collections of information in Internal Revenue Service regulations. This table shows, on the left-hand side, it shows the statute. We see Section 1 there, and the current OMB document control number of the form that is required by Section 1 is 1545-0067. Again, Section 1, the tax imposed, requires the form bearing OMB control number 1545-0067. Now that's the control number assigned to the form required by Section 1. Here we have that same section mimeographed straight from the law, from the back of the book. It's Part 602. Section 602.101, OMB control numbers under the Paperwork Reduction Act. We see this is the 1994 edition of the law, which is a little old. And we see the section on the left, the code section, the arrow points in Section 1, and in the column on the right, the form, OMB document control number, the ID of the form required by Section 1. There's only one form listed. Now, Form 1040 and OMB control numbers. Right here under the blue arrow, we see the OMB document control number assigned to the Form 1040 is OMB number 1545-0074 and is not 1545-0067, which was shown as required. Therefore, Form 1040 is not required by law in association with the income tax imposed by Section 1. Has the wrong OMB document control number on it. What form is required? Here we have Form 2555, Foreign Earned Income. And there underneath the arrow we see OMB number 1545-0067. The OMB document control number 1545-0067 was assigned to this form 2555 until the year 2000. This is the form required by law to be filed by citizens in association with the income tax imposed by Section 1, not Form 1040. And this form reports foreign earned income under tax treaty. What does it say there? Who's supposed to use the form? For use by U.S. citizens and resident aliens only. Right there underneath the title, for use by U.S. citizens and resident aliens only. This is the form required by Section 1, not Form 1040. So, what is taxable income? Title 26, United States Code, Section 63 says, taxable income defined, A, in general, except as provided in subsection B. For purposes of this subtitle, the term taxable income means a gross income minus the deductions allowed by this chapter, other than the standard deduction. Section 61, gross income defined, provides a general definition, except as otherwise provided in this subtitle. Gross income means all income from whatever source derived, including but not limited to the following items. 1, compensation for services, including fees, commissions, fringe benefits, and similar items. 2, gross income derived from business. 3, gains derived from dealings in property. 4, interest. 5, rent. 6, royalties. 7, dividends. 8, alimony and separate maintenance payments. 9, annuities. 10, income from life insurance and endowment contracts. 11, pensions. 12, income from discharge of indebtedness. 13, distributive share of partnership gross income. 14, income in respect of a decedent. And 15, income from an interest in an estate or trust. But where did Section 61 come from? What's its legislative history? Here at the bottom of Section 61, in the version of the law from 1954, we see a footnote at the bottom of Section 61 that identifies the source of the new code section. Section 61, according to the footnote, came from Section 22A in the 1939 code version of the law, which was the code version previous to this 1954 version where the footnote appears. The footnote says the law came forward substantially unchanged. Now, Section 22, gross income in the 1939 code, reads very similar to Section 61 in the 1954. A, general definition. Gross income includes gains, profits, and income derived from salaries, wages, or compensation for personal service of whatever kind and in whatever form paid, or from professions, vocations, trades, businesses, commerce or sales, or dealings in property, whether real or personal, growing out of the ownership or use of or interest in such property. Also from interest, rent, dividends, securities, or the transaction of any business carried on for gain or profit, or gains or profits and income derived from any source whatever. You can see Section 61 and Section 22 are really very similar, with only the formatting of the paragraph having been changed. But just how is Section 22, and subsequently, therefore, Section 61, enabled under the law? The CFR Index Parallel Table for the 1991 enabling sections shows Section 22 there in the left-hand column at the top under the 26 U.S.C. United States Code provisions for the 1939 Internal Revenue Code sections. It shows Section 22 is implemented under 26 Part 519. Now right underneath it, notice that Section 40 is implemented under 26 Part 1. Also notice that Section 62 is also only implemented under the 500 series parts, as is Section 22. So Section 22 is only implemented under 26 Part 519, but not Part 1. Chapter 1, Internal Revenue Service, Department of Treasury, Parts 500 to 529, Subchapter G, show us what Part 519 is. Regulations under tax conventions, tax treaties, and we can see Part 500 is reserved, Part 501 is Australia, Part 502 is Greece, Part 503 is Germany, etc., etc., until we get down to Part 519, Canada. Part 519 is the Canadian Tax Treaty. Part 519 is the Canadian Tax Treaty. Section 61 actually defines the sources of taxable income under the 75-year tax treaty with Canada that was signed in 1918 and lasted until 1993. This is because of the limited implementation of Section 61 that was inherited from Section 22 under the 1939 Code, which was carried forward, according to the footnote, substantially unchanged. Part 519 is the Canadian Tax Treaty. Section 61 does not define the domestic sources of a citizen's taxable income at all. As far as citizens are concerned, Section 61 only defines the Canadian sources of taxable gross income under the Canadian Tax Treaty, which agrees with everything else in the law that we have seen regarding subtitle income tax being a foreign tax in the form of a tariff, exactly as it was identified by the Supreme Court in the Brashaber decision in 1916. Now, the Internal Revenue Manual, Section 1132.75, defines the Criminal Investigative Division. The Criminal Investigative Division enforces the criminal statute applicable to income, estate, gift, employment, and excise tax laws, other than those accepted in IRM 1112.51, involving United States citizens residing in foreign countries and non-resident aliens subject to federal income tax filing requirements. The Criminal Investigative Division Service of the IRS is only authorized to investigate United States citizens residing in foreign countries and non-resident aliens subject to federal income tax requirements. Why only foreign persons and citizens in foreign countries? Because the income tax is a foreign tax in the form of a tariff. Read the whole story at www.taxfreedom.com. Get affordable legal help at www.irszoom.com. Thank you.